Hello traders, Nick Shaheen looking at Pinterest fresh off of an earnings report. So it looks like it's down. It's down! Down goes Fraser, if you're old enough. Okay, so no surprise. I had a discussion with the members today about it, and they asked me going into the earnings, what do you think? Should I close the longs? I said depends on what kind of longs. I would not have closed the longs because the way I go long is by selling puts and put spreads below, and those are fine, even with this 10% drop, 8%, whatever it is. So the range was set. They were ping-ponging inside the range, and it was right back to the middle of the range. And now they're back to the bottom of the range. So let's talk turkey. So I do have a membership program going on. It's a chat room. It's open all day, every day. We do great work. Almost 300 people, 290, 280, I lost count. It's not free to be in there, but it's free to try it out. There's a link in the description, and it takes you to PayPal, but it's for $0. Absolutely no charge for 10 days. You can cancel anytime if you don't like it. I think you will, unless you're a jerk, then you won't. All right, so let's see if we can dissect the price action first. Let me go read the headlines to see why the freak out. Oh my God. Okay. So I'm laughing because you will laugh too. Hideous report, right? Okay. No, it's not hideous. Let's see. 210% increase over last year on the bottom line earnings per share, and a 78% increase on the top line, the sales. Horrendous, right? Sarcastic, of course. It's all about stupid expectations. These guys price moves based on what's already baked in and what people are expecting. So my argument every time going into an earnings report, they say, what do you think? I think they're going to beat the earnings. I think I should go long. Like, if you think you should go long because they're going to beat the earnings, let this and 1,000 other people, the companies that report this time, prove to you that that's not the factor. It's all about how many people have what kind of expectations. That's it. It's not the quality of the reports. None of the mega caps delivered crappy reports in the last 5 years. None of them. Well, maybe one or two. But the moves are coin flips. If you count them, they're literally up and down 50-50. If not 50-50, pretty damn close. So if the logic is that good report pop, then they should all be pops because most of them were good reports. There is no bad report from Apple, no bad report from Google. But there are some bad reactions from Apple and from Google at times. That's it. So let's talk levels. Let's go to a daily chart, which is what people like to look at. We'll take my lines out. They were here today, and now they're here. After hours, they came down straight to this one and popped off of it. So now they're down 7%, slightly off the lows, which were somewhere down here. So it's not a surprise where they held after hours. Why? Because of the base of this last little jaunt. These are about a week's worth of moves. They went back to base, totally normal. Which is more normal is this. 3 days basing for this guy. So that base has been tested once, twice. What you don't want to do is come back to it and lose it. Then it becomes like I think that technically the head and shoulders is already triggered. Depends on where it closes tomorrow, sideways. But I'm a guy that likes to believe in levels. So yeah, maybe the head and shoulders, if I draw it this way, would bring 60 again. But I would like to see this fail first before I call for doom, wouldn't you? So what I'll do is I'll put an alert. Kind of an alert. Come check it out. Let's see what's going on. So the alert would be buy the dip with a tight stop. What does that mean? So I'll try to catch the falling knife if I'm a fast trader, but I should stop out immediately after this because the basis of this trade is that this is a floor that held last time. It's going to hold again. But if it doesn't hold, it means I'm wrong. I should get out. And then I'll repeat the process over here. So here again will be a buy the dip with a tight stop because I don't want to find out what's below here. Here I will just buy the dip. I don't think this will fail unless the markets have failed. So if you lose this, you're going to here. But this scenario, below 52, this scenario needs the market to also break down. So it's the improbable scenario. So I guarantee you in the comment section, somebody's going to get pissed off and then yell at me for saying it's going to 52, which is not what I said. I said I will try to catch the knife. I will try to catch the knife. I will try to catch the knife. But if this fails, it's going to here. All day here, it's going to here. And that's what happened with Hyliion, and I got a crap ton of headaches for it just because I tried to help somebody. Anyway, back to Pinterest. Let's look at the fundamentals. Overview picture. The blue is top line, the revenue, which is great. It's going up, up, and away. The net income is good. It's not a disaster, and they turn a profit, I believe. Debt to assets falling. That's that orange line. That's how it should go. Operating cash from operations growing. It's not super great, but it's growing. At least they're not bleeding, so they don't need to borrow basically to operate. Let's see here. Revenue, we already said, is growing, so this puts it tangible. From $500 million in 2017 to 3/4 to 1 and change in 2019. That's before COVID effect. And then COVID came in and should have launched it more, though. So 1.7 is great, but compared to what, let's say, Zoom, it's lagging a little bit. Statistically speaking, it's definitely not cheap. I don't know how live this number is, but the price to sales is basically hope. How much hope the buyer is. For example, if I'm buying shares today, I'm accepting and giving them credit for 31 years worth of all their sales this year, or a 12-month basis today. That's the price to sales ratio. Pretty steep, so it's not cheap, but buying the levels is a trade more so than a long-term investment. Is this a long-term investment buy the dip? No, it's a trade buy the dip for me. So how would I usually buy the dip? That's a different story for members only, where I will go into the options tables and figure out ways to do it. With shares, just simply buy the shares, trying to eke out a profit that way, but that ties up a lot of capital. With the options, people scare you into thinking options are more dangerous than actual shares. They can be, but they are not by rule. If you use them silly, sure, because they gain a lot faster than shares. So if you start doing it without any thought or knowledge of charts, you're at the disadvantage and you tend to lose. You can't compete against the market makers. So if you know their rules, you can play within their rules and you can both win at the same time. All right, so here we go. Let me show you my drawings from before today. I did not update them for this video. Resistance above. I had a long trade. I can't remember when I entered it, but I know at one point it was red and at one point it was green, but it was selling puts in the low 60s or mid 60s, so it's still a viable trade for me, and based on this chart, nothing is worrisome about it. The only caveat to any stock anybody should consider long these days is the overall vulnerable situation for the stock market. I will catch flack for that as well. We're going into a seasonally weak period. I didn't make this stuff up. The Wall Street people call it the sell in May and go away period. If you know me, I cannot stand these memes, up or down. But they do happen, and they're there for a reason. They become self-fulfilling prophecies. So why put myself in front of a buzzsaw? So every day I share trades, and I struggle these days to find ones that could survive a shock from the economy. Macroeconomic conditions are still okay. We have $5 trillion. I'm rounding. I can't believe I'm rounding trillions of dollars that are floating around from grandpa and uncle. So it's hard to short this, but it's also vulnerable from a trading perspective, short term. I'll give you a visual. No, don't get scared. I'll take the lines. Those are short-term lines. I'll take them out. This is the SPY daily chart. Super. In the hands of the buyers, but this does not make for a good base for anything. So pick your entry points in the stocks. That's my opinion, especially if somebody's investing. There's no way you can convince me to, quote, invest in anything at these, like commit a lot of capital for an investment, unless my time horizon is 3, 4, 5, 6 years. I'm not going all in anything. I don't care how good it looks. Nothing. So dips, sure. I've gone out and shared the dip buying opportunities in everything. So even in Bitcoin stuff like Mara. Back to Pinterest tangents. Not a reason to panic on a dip. There is some worrisome areas, but each of them is an opportunity to try to catch it with a tight stop. So it all depends on the style of trading, how fast you're trading, and nothing in here actually was an call to action to go trade it. I'm sharing what I would do based on the charts and based on the price action and based on the actual reports I'm reading from Pinterest. By the way, same reaction to Microsoft. Maybe I'll do a video on Microsoft too. Great report, sold off. Google, great report, pops. All about freaking expectations. Don't kid yourself that you think you know what they're going to do the next day. The CEO doesn't know what they're going to do. And by the way, has the CFO talked yet? Don't let the CFO talk on Google. All right, later, bye.